Mr. Speaker, I rise today in strong support of H.R. 4296, an important bill authored by Mr. Lukemeyer, who is a real leader on our committee. He is the chairman of the Subcommittee on Financial Institutions and Consumer Credit and has led on many bills on the floor. This particular one addresses the burden that unnecessary operational capital requirements have imposed on our financial institutions and then consequently on our hardworking families and small businesses who are seeking credit. The Basel Committee requires U.S. financial institutions to hold excessive capital based upon a look-back approach to an organization's risk. Previous earnings and other provisions that provide no indication of future risk. Again, Mr. Speaker, this is about holding operational capital for past activities. This methodology employed by the international standard setters has forced our banks to hold hundreds of billions of dollars in reserve rather than putting that money to work in the real economy, in loans and investments, for people to buy cars, to launch small business enterprises, maybe to make a down payment on that first home. Again, Mr. Speaker, let me say it so that all can hear. Hundreds of billions of dollars is currently sitting in banks across the country not being utilized to fund the mortgage loans and car loans and other day-to-day financing that American families and individuals demand. And on top of this is the increased cost of compliance that banks have had to shoulder under the Dodd-Frank's onslaught of regulation. Banks like Coatesville Savings Bank, the only remaining bank in Coatesville, Pennsylvania, has told us that now 25% of their annual budget is nothing but compliance costs, Mr. Speaker. I mean, this is detrimental to the Coatesville, Pennsylvania community, because that's 25%. I mean, that's a huge figure, Mr. Speaker, that cannot be used to fund the American dream in Coatesville, Pennsylvania. So again, Chairman Lukemeyer brings us a very common sense reform and a very necessary reform. Now, most agree and recognize that the importance of our financial institutions to hold capital in the event of future crisis or distress. Nobody denies that, and this legislation does not remove those requirements. But, Mr. Speaker, requiring banking organizations to look back in the rearview mirror and hold operational capital against discontinued activities or products, it's just not nonsensical. It is crazy. It makes no sense. H.R. 4296 simply amends the method of how reserve capital is calculated by establishing standards based on an organization's current business activities, making the requirements more accurate and tailored to a bank's current risk profile. Again, Mr. Speaker, it's just common sense. That means banks would still retain sufficient reserves to weather an economic storm, but they would be able to put the billions of dollars currently sitting on the sidelines to work to help make the economy grow, to make it healthier. In short, this method-based approach proposed by H.R. 4296 properly calibrates operational capital while also ensuring a strong, healthy financial institutions and thus a stronger economy for our constituents. Again, to be very clear, Mr. Speaker, H.R. 4296 does not prevent federal financial regulators from instituting operational risk capital requirements. It does not eliminate the authority of a regulator to assess operational risk, nor does it prevent regulators from requiring that capital be held against riskier activities or businesses. The bill simply puts forth a thoughtful framework that sets parameters while allowing regulators the flexibility needed to ensure that capital standards are appropriately tailored. A healthy financial system, Mr. Speaker, will enhance individuals' financial freedom and will lead to a healthier and better regulatory system. H.R. 4296 has garnered strong bipartisan support in our committee, passing by a vote of 43 to 17, again, because it is practical and common sense. I again want to thank the gentleman from Missouri, Mr. Lukemeyer, who chairs our Financial Institutions Subcommittee, for his leadership on this bill. I urge all my colleagues to join me in supporting this important bipartisan measure, and I reserve the balance of my time.
The gentleman